Good morning, students. Today is your first class of your first semester. So, I will be introducing myself. I am Ms. Pranami Chakrabarti, Assistant Professor from Department of Management. I will be taking your Financial Accounting and Reporting paper. Your MBA first semester paper. This is an accounts paper. This paper will be taken by me. So, when you say accounts, most of the students get scared that accounts will be having lots of sums. It will be a tough paper. It's not like that. You have to practice the sums, which I will be explaining. And if you practice the sums regularly, then I can say you accountancy is the most scoring paper. You can score a very good marks in this paper. So before doing any sums or any new topics of accountancy, you have to know few basic accounting terms. These accounting terms will be used in your entire subject. So these are the terms, the meaning which you should know, because basic things or basic meanings you have to learn, or you have to understand, and you have to know it. So in this class I will be explaining you few basic accounting terms which are important. Okay, there will be many terms which you will be getting while doing the core topics. Obviously there will be other topics also, but these are the topics, or these are the accounting terms which you should know. So we will start with that. First one is bookkeeping. Now what is bookkeeping? Bookkeeping is the recording on a day-to-day basis of the financial transactions and information pertaining to a business. It ensures that records of individual financial transactions are correct, up-to-date, and comprehensive. Accuracy is therefore vital to the process. So all the day-to-day financial transactions are recorded in a systematic manner. This recording on a day-to-day basis, this systematic recording is called bookkeeping. Now next is business transaction. I have told the word financial transaction, but what do you mean by business transaction? A business transaction is an activity or event that can be measured in terms of money and which affects the financial position or operation of the business entity. A business transaction has an effect on any of the accounting elements: assets, liabilities, capital, income, and expenses. In simple words, business transaction is exchange of goods and services in terms of money. Say for example, I have taken a book from you and I have paid you rupees 200. That is called a business transaction. But if I have taken a book from you and I have not paid you anything, then it is not a business transaction. So exchange of goods and services measurable in terms of money is called a business transaction. Next is capital. Capital is a large sum of money which you use to start a business or which you invest in order to make more money. Capital is also called a startup money. The money with which you will start the business is called capital. Next is account receivable. The amount of money owed by customer or client to a business after goods or services have been delivered or used. So, the amount which we will be getting from the customer in future is called the amount receivable. That means the amount we have not received yet, but we will be receiving it in future. That is called amount receivable. Next is amount payable. It is just the opposite. the amount of money a company owes creditor in return for goods or services they have delivered. Amount payable means we have taken goods from the customer and we have told that we will be paying the amount, or we have to pay them that amount. So the amount which you have to pay them to the customer is called the amount payable.